Yeah, Sarah, thanks. I've been adding actually since February. We know the reasons for the sell-off. Things were oversold. You had people worried about the Ukraine situation, inflation, when is peak inflation, what the Fed is doing, and of course, since the Fed eased, we've been moving in. But when you look at the individual names, you had Amazon, Microsoft, Alphabet, Nvidia was just talked about. Nvidia was down almost 30%, and these other names were down in the high teens. And yes, it was a PE revaluation because we all know that forward earnings get discounted when interest rates go up, but it was way overdone. And these are great names with each one has an individual story, but they go into big growing secular markets, and that has not changed. So to me, these were ideal opportunities to add, particularly Nvidia, which it's you've seen what's happened since. It's back actually beyond its the start of the year high. But that is exactly why. And I also added a few reopening plays, and I had talked about Uber another time, or Booking Holdings, which is an online travel play. And I also wanted a good defensive healthcare play, which is a core holding, but I wanted to add to it because that also is down almost 10%, and that's United Healthcare. And that is a solid core holding. You don't get many opportunities to add that cheaper than it currently is.
So, Barb, are you not afraid of the Fed going all in on the inflation fight, potentially 50 basis points of hikes at upcoming meetings, a hike at every meeting, the trimming of the balance sheet, all the things that it's planning to do, which could pressure growth and valuations?
Yeah, well, you know what? It's already in the stocks, and we see how the market's behaving. This is well known. In fact, it was leading up to the Fed meeting where people thought the Fed has to raise rates, and then they announced that they were. Then the market started to take off. So I think this has been more than discounted in the stocks. We've got 6 maybe hikes ahead. That could slow things down a little bit, although this is a bit different. In the past, consumers had a lot more debt and they were borrowing. They're not so much. They still have excess savings. I think where the difference could be, at least for the short term, excuse me, is in housing. Because you've seen mortgage rates go up 100 bips, that could cause a little bit of a stutter step, and we've already seen that a bit in the refinancing, et cetera. But we should also remember there was a housing boom when mortgage rates, the 30-year, was at 6%. So, I think the consumer is going to keep spending, and I think these companies are going to thrive. And we've seen this for the last couple of years. These names are great sources of profit taking, and you rotate into other names. This time it's been energy, it's been metals, so it's been the cybersecurity. So people have come back to fantastic long-term stories.